Joining us now is Jason Tyler of Ariel Investments. He focuses on investing in financials and helps oversee $5 billion in assets. He was this morning from Chicago. You know, it's a bit surprising, you could say, to see such selling in Morgan Stanley today, given that we already knew there was a, sort of a mass investigation here of the top firms. Sixth largest one in the focus is what we're hearing now. Why hasn't this been priced in?
Well, Margaret, I think a lot of it is that the investment community was hoping that Morgan Stanley wouldn't get dragged into this, but obviously this news reflects that there is going to be at least an investigation. So people that were hoping that Morgan Stanley would stay out of the fray have been proven wrong.
Okay, and on this dip, what is it, about 4% decline on the day so far into the trading session? You're finding opportunities to buy today?
Well, over the last couple weeks, frankly, since we looked at the Goldman situation, we've been thinking about this more as an opportunity. We don't think that the transactions that took place here represented anything that was different than what's happened on Wall Street over the past few decades. Now, you could argue that it's not a great thing that these transactions occur, but the reality is that we don't see them, that they're going to be seen as illegal. There weren't any business practices that weren't in the norm. This is all about whether or not there was adequate disclosure to what we all know are very sophisticated investors. So unless there's some smoking gun or some email that comes out that evidences a true intent to mislead, I think it's more likely that these that the stocks will look back and think that this pressure was overblown.
So are you looking at this primarily as just like headline risk at this point, or are you considering, large amounts of settlements that potentially would have to be paid down the line?
Well, that type of scenario analysis is exactly what we're going through right now. And if you think about a Goldman, for example, the stock has come off about $20 billion in market cap.
Wow.
And so certainly you'd have to have something much more than just a large settlement to get justification for the stock coming off that much. It would have to be an enormous reputational impact to the firm. And we just think that that's unlikely. So it makes us very interested, and probably with a lot of other value investors, at buying the premier franchises in investment banking at a time when there's a heavy cloud lingering over them.
So who benefits from this overhang?
Well, hopefully it's the longer-term investors, and I think you're seeing now that the sellers are saying that there's downside risk here. They want to stay away from headline risk. They're walking away from the stock, and if you've got a more contrarian approach, those are the types of investors that really are going to be very interested in looking at this as a once in a 5 or 6 year entry point for the investment banks.
And you're putting money to work in Lazard and JP Morgan right now?
Yeah, and Lazard is a great one to talk about, Margaret, because I do think that there's one that even if you are concerned about litigation risk, Lazard their niche is really to say that they don't have as many conflicts of interest. Their business model is set up strictly to do M&A advisory, asset management, and restructuring. So they don't take these bets alongside their clients or against their clients, and I think it's giving them a competitive advantage as they go out and arguably take market share, at least in the short run, from some of the larger institutions. So that's one that we feel very strongly about.
All right. Thank you so much.